Hussbus bus stop.
Hey, what's up, everybody? Paul, the adopted Hussey here with this week's
Hussbus bus stop.
here to talk about refinances. So, mortgage rates and mortgages in general have been in the news lately. I'm sure a lot of you have heard. Rates have been doing what rates do, which is going down, going up, moving around. So there is a lot of opportunity to refinance, or a refi boom is coming. And what I really wanted to talk about was, what is a refinance? Because it's easy to just throw these terms around, and in our circles outside of places that we meet and gather, and everybody sounds like they know so much what they're talking about, when if you've never owned a home, you might not even know what a refinance does or what it even means. So when you purchase a home using a mortgage, you are financing the home, much like you would a vehicle. If you don't buy the vehicle straight cash, homie, you're financing it. So when it comes to mortgages, you will have an opportunity to refinance or redo the financing on said mortgage, right? So there's two basic ways that this is done. One is a rate and term refinance, where you are offered a better rate or better terms from the lender, and then that constitutes a benefit to the borrower to perform the refinance on your current mortgage. Number two is the cash out refinance, whereas if you're sitting on what is called equity, or basically you're into the plus money in your percentage of ownership in the home you own, based on your mortgage balance versus what the asset is worth, then you can pull the cash or equity out of that property through a cash out refinance, and then get a new amortization, new rate, and new terms based off of the new higher loan amount. For example, if your house is worth $400,000 and you only owe $100,000, you can take a percentage of that equity, let's say 75%, right? You do a 75% cash out refinance. You pull a new loan amount for $300,000, subtract the $100 you owe, and then, yep, you guessed it, 200 G's back in your pocket. And now you would think, why would somebody do this when everybody's interest rate is at 3% or 2.5% or something like that? Why would people refinance and do that and pull that cash out when they risk getting a new 6% or 7% interest rate in the last year or so? Well, a lot of reasons that primary homeowners do that outside of investors is if they have accumulated a lot of debt. So if you have a bunch of credit card minimum payments, an old car you just can't seem to pay off, student loans, personal loans, home renovation loans, and you're just getting minimum paymented to death, if you pull the cash out of your home and use that equity to pay off the balances of some of those debts, yes, your mortgage payment will go up because the new loan amount is higher, but your total monthly going out may very well decrease by a significant amount. And to the common consumer of mortgages, your common homeowner, it's more about the monthly total going out of the house per month versus what's coming in than it is the little interest rate attached to, the mortgage note or whatever. So basic refi or refinance 101. Now, investors use these cash out refinances for a whole bunch of different reasons, like the BRRRR method, if they want to buy a property, cash, fix it up, they refinance, pull the equity out of it, pay themselves back, and then go buy another one. I have a handful of clients that are building quite the nice real estate portfolio, doing that right now as we speak. But what you're going to see more of is most likely the rate and term refinance coming up. Lenders are getting out ahead of this. They're offering huge credits for government-backed loans like VA loans, FHA loans, which tells us in the market that they know that rates are heading down, right? So any lender that's offering a large credit on your interest rate currently to do some type of refinance is they are trying to grab up those consumers before it's free game out here and all the other lenders are just down with what the rates are going to be. So they're just trying to get out ahead of the thing, right? So that's my refinance 101, the crash course. Rate and term, is if you bought, say, in the last year and rates are now like significantly lower than that, you could just lower your payment. And if you have a bunch of equity in your house and want to use that equity to either purchase another property, get yourself out of debt, you just like to fatten up your bank account a little bit for whatever reason, that's a cash out refinance. So that's what everybody's talking about when it comes to the refi boom, is that rates are now expected to dip to a point low enough where as many people have purchased or locked in a rate in the last couple of years when they were trending up, now we'll be in a position to save money on that monthly payment or have some equity and perform what's called a refinance. So if you have any other questions about that or anything else mortgage related, or you just want to, get on the horn with some goofy goofballs that happen to do mortgages, the Hussey team is here for you. Cheers.
Hussbus, bus stop.